Hello and welcome to the Look Ahead with me, Fiona Cincotta, Senior Market Analyst at City Index, looking ahead to Tuesday, the 11th of November. So we've got this ongoing situation where the US shutdown could potentially be nearing an end. So attention is very much going to be on any developments from the US with regards to that. However, in the meantime, whilst the shutdown is continuing, it does mean that the focus is on data also coming out of Europe. So tomorrow we've got UK unemployment figures. Now, unemployment figures in the UK are expected to show the unemployment rate has risen to 4.9%, up from 4.8%, with expectations that UK unemployment could indeed rise towards 5% early next year. And this is as firms have been really scaling in or reining in hiring activity following the Chancellor's £25 billion tax hit increase on employers' national insurance, which came into effect in April and has just resulted in firms, as I said, reining in hiring activity due to the increased costs. As a result, unemployment has pushed higher. The wage growth is also expected to ease slightly down to 4.6% from 4.7%. So still actually quite high and really not consistent with an inflation rate of the 2% that the Bank of England is targeting. So the data does really highlight the challenges that the Bank of England is facing, where you've got this rising unemployment, still sticky wage growth, which will be keeping inflation above target. And yet at the same time, we did hear from the Bank of England last week. They left interest rates unchanged as expected, but they were slightly more dovish than expected, with a narrow vote split of 5-4. We did also hear about some concerns over the health of the UK labour market. So with that in mind, any weakness that we see tomorrow in the data could indeed fuel December rate cut expectations. Now, as far as levels are concerned, we've seen the pound fallen down to this level here at 130, a level that was last seen in April. Now, this is a combination of factors which have seen the pound fall to this levels. We've also seen it fall to multi-year lows against the euro. So, I mean, this isn't necessarily a dollar strength story, although there was dollar strength at this period. But this is also to do with concerns over the Chancellor's upcoming budget at the end of this month, and the fact that tax hikes are looking almost inevitable, which would potentially slow the UK economy further, hit the jobs market potentially harder, and mean the Bank of England would need to cut rates faster. So that's what we've seen with the UK, with the pound dropping to that 130 level. We have seen a rebound from that lowest level, but it's just struggling here at that 130-160 level, which was also the low that we saw back in August, also the low that we saw back in May. So a pretty significant level. Hasn't managed to close above that level. That's what we'd be looking for, is a close above there would actually then expose the 200 SMA. But the downtrend, the trend is still downward. We would we've got the RSI, which is also below 50, suggesting that momentum is towards the downside. Failure to rise above this level, we're going to be looking here at 131, just as the round number. Also the high that we saw opens the door to that towards 127. So as far as other data is concerned, we've also got German ZEW economic sentiment, which will be in focus. Is expected to deteriorate just slightly, which sort of goes hand in hand with the investor sentiment data that we saw today from the broader Eurozone, which did in fact weaken unexpectedly to -7, down from -5.4. was expected to improve to -3.9. ZEW economic sentiment also just looking to deteriorate slightly. But I think that just highlights again the concerns that there are still surrounding the health of the German economy. Although we are expecting a little bit of a recovery, it's not really expected to take hold until into next year. But saying that, we did see PMI data last week, which was significantly stronger than expected, which especially in the service sector, which should be some encouraging news. And I think because of that stronger PMI data, the market really has brushed off the investor sentiment data today, could potentially do the same if we see weaker ZEW economic sentiment figures tomorrow, especially if we're seeing that optimism surrounding the US government shutdown coming to an end. If you see there, we've seen this recovery in the DAX, just testing the 50 SMA there at just under 24,000 as a resistance level. Long spike here suggests there was little selling demand at those lower levels, holding above that trend line that dates back to early May, still above the 200 SMA, although we have seen a series of just lower highs. So, you know, buyers really need to get a close above that 50 SMA at the 24,000 in order to bring 24,400 back into focus. That was the high at the end of October. And then obviously record highs there at 24,775. That's what we'll be looking for on the upside. Downside support level to be watching, I think, is around the 23,350. That's the 200 SMA. It's also this level here, which has been a support on numerous occasions across the past few months. And then below here, we get the low that we saw in June, which was the 23,000 level. Just as we are talking about the US government potentially opening very soon, there's little known about how quickly data will be coming out if there is this reopening that the market is optimistic for after certain measures got passed at the weekend, which means that they are certain Democrats and Republicans are certainly a step closer than what they have been. We've seen this recovery here in the NASDAQ, but really hasn't picked up that much of the loss that we saw last week. I mean, we did see quite a big loss. The NASDAQ experienced its largest or its weakest weekly performance since April. And that was on a combination of factors: concerns over stretched AI valuations, and that challenger job cut data, which showed a weakness in the US labor market. And, you know, that sort of saw that spike lower here down to the 24,000 to the 50 SMA, basically, 24,700. But we have seen a recovery on that optimism. If we get this US government open, it does mean that it just removes the level of uncertainty. And we know that markets dislike uncertainty. Pushing above that level there, then we could see 26,000 come into focus and fresh record highs on the upside. So that is everything from me today. I hope that you've liked what you've seen, and for more videos like this, please do like and subscribe.